Good morning. Good morning. Hope everyone out there is having a good week so far. Certainly an interesting start to the day, getting a bit of a pullback pre-market here. And just give me a moment. I'm just getting everything set up on my end here. But really what this is being discussed as is some questioning about the AI driven narrative. We can see the weakness pre-market is focused in a lot of those same stocks. So there may be some merit to that notion. The big question on a lot of people's minds really comes down to one thing. Where are companies like OpenAI going to get the money for all of these deals? And will they need the compute? That's something that I'm wondering as well. With everything becoming more and more efficient, do we need this much AI compute? My personal inclination is probably not, that we're overdoing it just a little bit and that we're a little too excited about generative AI in the grand scheme. And that happens with tech. We have these cycles where we're super excited, and then we have these cycles where we're scared. And right now we're in the euphoria mode about AI. So let's get through our disclosure real quick. Big thing to take into consideration here for every investor, no matter, and every trader, no matter your experience, is you don't want to risk more than you're willing to lose. That is the key. Risk management is always first and foremost. It should always be your primary concern before entering any trade or investment. You want to ask yourself, what are the risks here and how much am I willing to lose on it? Not how much am I hoping to make on it. That comes later. The first question is, how much am I willing to lose on it? Now, I've been doing this for about 20 years, trading, investing. It's been a pleasure. I've learned a ton. I've met a lot of amazing people. And I'm fortunate that I was able to meet a lot of really, really helpful mentors earlier on in my journey. So that let me get a bit of a jump start on my trading. It let me learn a lot early on. And it was really helpful. And that's kind of what's inspired me to do what I'm doing now. I want to pay that forward. It's one of the reasons I'm on social media. It's one of the reasons I've started TraderAid. I really want to help people try to find their edge in these markets, full well acknowledging that we're all wired differently. We're not all going to see things the same way or have the same systems that benefit us the same way. And that's good. That's kind of the beauty of a market, is that we're all wired differently. I might love trading gold right now. Someone else might find this is the worst environment they've traded gold in a long time. But, quite frankly, that's fine. As long as you can find what works for you, create a repeatable system that you can build your consistency in, then you can find a path towards becoming a profitable trader. But one thing that I want to say, because I've gotten people reaching out that say, hey, I want to quit my job, I just want to trade full time, etc. Please be careful, because it's not something that you can just flip a switch and become a profitable trader. It takes a lot of work. And what I like to say is the best investment that you can ever make is the investment into yourself. That is to say, learning, polishing your knowledge, becoming more consistent, building systems. And we've talked about that a lot. What kind of systems one can build for, let's say, trading gold or Bitcoin. I've shared systems for that on here in prior episodes. But I think taking a more systematic approach helps to build consistency. And in doing so, we're able to improve our overall outcomes over time. The other thing that I would say is be patient with yourself. This is not something that just automatically clicks. It takes some time, it takes some energy, it takes some effort for trading to really become something that you're able to do without A, making emotional decisions out of haste, and B, kind of running yourself over because of them. So the goal is to become less and less emotionally tied to the outcomes of your trading, really. If we're talking about this as a business. And I see trading as a business because at the end of the day, we're trying to make sure we're going to be able to buy and sell inventory and capture a positive spread repeatedly. That's really what we're doing. We don't need to dress it up any more than that. The more we dress it up and make it seem like it's glitz and glam, the more likely it is that people have unrealistic expectations about what their outcomes may be. Personally, I'd rather you all avoid all of that and any pain that might come with it. So let's talk about our weekly pivots here. I'm going to share these on social as well. For the S&P 500, that is 6843. For the NASDAQ, that's 25,700. And we can see we are below those weekly pivots pre-market. NASDAQ just barely above it. I should correct myself there by about 17 points. But S&P clearly below. So again, I'm sharing these on Twitter. You can find that at Mayhem for Markets in case you want that reference. It's shared every Monday morning on the Trader Aid Discord too. So if you're a member, you get that heads up a full day in advance about these key levels that we're watching. And the reason that we're watching that pivot on the S&P, you can see this is our long-term swing pivot chart. This has been a pretty important level. We gapped above it. We left a lot of a decision zone, as I like to look at these, open. And then really after earnings last night from Palantir and in the overnight session, we've seen some more questioning about the AI narrative. Now, Palantir's earnings were great, but the company is extraordinarily expensive, so I'm not surprised to see it pull back. But what's really important is watching these levels. We have the put wall and vol trigger at 68.80. We have this pivot at 68.43.25, and then we have the 21-day exponential moving average just below here at about 6,800. So we're in this confluence area. We're also flipping into negative gamma. We've got that gamma flip level here at 68.23. So that gives us a sense we could be getting into a little bit more of a volatile trading environment. This corrective impulse, which started in crypto, if we really think back, where was the weakness? Where were there signs of this before it hit the broader stock market? It was in Bitcoin. It was in the other cryptos. They were really taking it on the chin for a bit. And remember, there was a lot of talk of Uptober. And yes, Bitcoin did hit a new high early in the month, but then it was just sort of downhill and sideways from there. And my view on Bitcoin is pretty simple. I'm looking for it to get back to the 20-week moving average. I've posted about this on social. I think that's where we get a bid. Let me put a chart up real quick so I can show you what I'm talking about. But that's the level that has me interested in a potential rebid on Bitcoin. And we're getting quite close to that. So here's the Bitcoin chart. We'll zoom it in a little bit more. And we can see we're hovering right above that 20-week. The 20 week's probably going to be about 1025. Prior episodes of hitting that 20-week moving average have led to a pretty powerful rebid. So that is what I'd need to see here. I don't want to just buy because it hits the 20-week. I want to see it crush the 20-week, head fake below it, get a nice solid bid from there. That's where I'd say, okay, we've tested it, we've confirmed it. Our risk to reward is clearly defined. This goes back into being a swing with the potential of hitting new all-time highs. That's how I'm kind of looking at it right now. And we're very close to that point. But the other thing is you're starting to see fear build up. There's a lot more fear in, the crypto social space. And it may sound a little morbid, but I like to see that. I do want to be buying things like this when other people are a bit scared. So going back to the S&P chart, also kind of an important inflection point. Not a lot of good things happen below the EMA 21. We could see it tends to get a lot more dicey below there. So if we do crack that on a closing basis, I would be more concerned. Already getting below this pivot, if we close the weekly pivot, like if we close today below this pivot, I will be looking for more hedges as well. Because you can see we don't have another really strong area of support for almost 300 points. There's some support down here, but it's not that strong. So we'll be watching this closely. I think it'll be a very interesting trading session. It's kind of, I feel like it's going to be one where we get pretty powerful energy out of the gate. There's either going to be a nice strong bid that helps to pull us out of this and probably back above that pivot, or we get a continuation and we get crushed lower. Some of that's going to have to do with the headlines that cross as the market's trading. We also have a lot of central bank speak happening, mostly from the ECB, but we get Fed's Bowman, he spoke earlier. We've got the BOJ tonight as well, their meeting minutes. So it's a very central bank themed day. And then, of course, a White House press briefing with Caroline Leavitt at 12 p.m. as well. In the calendar, no real economic data coming out. And then after the market bell, we've got AMD earnings tonight, which I will be covering. Now, for folks out there that have been waiting to pick up Bookmap on a solid discount, you can do so. Visit traderaid.com/bookmap. You get up to 40% off with our exclusive promotion. Just scroll down to those special offers. That's traderaid.com/bookmap. And speaking of Bookmap, we're going to dive right in here. So we can see yesterday during the afternoon trading, there was a lot of aggressive absorption by buyers and sellers, but ultimately sellers really ramped up that aggressive absorption into the later part of the trading day. That gave us a sense that there was plenty of supply overhead and they were willing to push with it. They weren't just iceberging. They weren't just sort of gently, passively selling. They were actually willing to aggressively absorb those buyers. That was a decent sign that we could have a bit of a tumultuous Globex. And so we did. We fell about 80 points in Globex, a little more than that. If you count peak to trough, it's probably closer to 90 points. So certainly some violence in the overnight session. That sets us up for an S&P that's going to open up in about 15 minutes, down 1.17%. The NASDAQ down 1.6%. Russell 2000 down 1.47%. And the Dow Boomer Index kind of shrugging this off a bit, only down 0.6%. Crude oil under pressure, as is the usual with crude. It's really been in a downtrend for years, down 1.24%. Gold down a bit, down 0.9%. Silver down 1.6% as well. Really a lot of weakness across the futures market overall. And the most recent trade we're seeing here on S&P is a 100 lot iceberg sale just overhead. So there was a passive seller recently continuing that distribution. Not the active aggressive absorption we saw yesterday, but at least some degree of selling pressure continuing this morning. So we're going to use the time slice to bring this back to a 20-minute chart. And into that 100 lot iceberg, we also saw pre-market new lows made just around 68.01 on ES. So you can see the overnight session, pretty strong pattern of distributed pressure. I don't know that that's going to necessarily continue into today's trading day. Often is the case we get a pretty powerful rebid during regular trading hours. So you have to keep our mind open that that could happen. But what I'm going to be watching to get a sense as to where the direction may go, I'm going to be watching the opening range. I like to focus on the 20-minute opening range. I'm going to be watching the SPX options flow. And I'm also going to be watching the passive and active flows on Bookmap. Those active flows like the aggressive absorption and exhaustion, and those passive flows like the iceberg buys and sells. All that will help to inform my view about the trend that we're in, if we are to have one today during regular trading hours. Markets open in just about 13 minutes. I'm going to take a moment here to look around the chats to see if anyone has any questions. If you do have any questions for me, please let me know. We are live on Bookmap's Discord, Twitter, 2 different YouTubes, Kick, Twitch, and Substack. So it takes me a moment to check around, but I will be checking around. And good morning. Good morning, Low Key. Good morning, Dvorak. Good morning, Ships. Good morning, One Logistics. Good morning, Cosmo Viking, and everyone else that's tuned in here. Good morning, Daily Invest Strategies. Yeah, we'll be talking about a lot of what all is going on here. Stay tuned. Let me go through some of these questions real quick. All right, so got a question on looking at Tesla real quick. I'm going to pull that up. I'm not very intrigued by OpenAI yet. I mean, if they're able to offer a product that really captures the hearts and imaginations of the enterprise, I'd be interested more. But so far, it seems like they're not really firing on all cylinders here. Oh, unfortunately, I am dealing with a bit of an issue here that prevents me from pulling up some of these levels that I wanted to pull up. I've got to quickly restart. Give me a sec. I got to figure this out before next time. But okay, so we have some other questions that I'll go over while this is doing what it needs to do. So Palantir, I talked about it yesterday. I don't know if you caught my earnings live stream, but the earnings were fantastic, but the valuation is still extremely rich. So it's not at all surprising that it's pulling back. I would like to see it pull back more. I don't like seeing companies or commodities or futures or anything really go straight up. And while Palantir's chart isn't just straight up, it is a lot of that type of movement. And it's on a very rich valuation. And a lot of it is, folks getting FOMO. And I get it. It's a really great company. I've owned it with a cost basis of $7 for years. So it's been life changing in terms of the gains I've made on Palantir. And I was talking about it back in May of 2021, saying I think this is going to be one of the biggest companies on the planet. I had that level of confidence then. I still have that level of confidence now. Nothing's really changed. The management's executing far better than anyone would have expected in the commercial space. And the results prove that. I mean, seeing a company grow their revenue at about 120% year over year is incredible. So there's a lot to love about the growth. There's not a lot to love about the fundamentals. I'm not a huge fan of the fundamentals, the way that this thing has been, trading higher and higher, and it really has a lot of room to grow into this valuation. So for me, if I was able to sort of decide the path of the stock, the most logical path for me would be to see it go meaningfully lower and then base and then start to grow into its valuation. That's what I'd like to see. Now, whether that happens or not, that's up to the market gods. But here is a chart of Palantir. And we can see that there's a bottom trend line here. So if that gets violated, you've got the cloud as support. Below that, you've got the 200-day. Those are the key levels I'd be watching. And right now, just under price, you've got the 21-day EMA. Palantir shares trading down about 8% pre-market here with some strong negative relative volume, suggesting sellers really are leaning into this. And it's not a bad thing. Again, this is a company that is trading at an irrationally high valuation. So if it's going to pull back a bit, that's not the worst thing that's ever happened. You know, we look at where it was trading into earnings. It was trading with a forward PE of 200 into earnings, a forward price sales ratio of 131 into earnings. That's really, really rich. And again, the growth of this company is astounding, but seeing it pull back a bit is healthy. That's really what you want. In terms of OpenAI going public, you know, I'm not too excited about it because this is a company that doesn't make a lot of revenue. It's made enormous spending commitments. And, you know, generative AI, it's cool. Don't get me wrong, it's come a long way, but it's nowhere near where it needs to be for enterprise use cases to scale. What do I mean? The biggest problem with generative AI is it doesn't know what it doesn't know. And so you get these models that you query it, it doesn't know what it doesn't know, so it returns something that it thinks is probably good enough. All of what the tokens that it generates in response, and this is how AI works. Its input is considered tokens, its output is considered tokens. The tokens that are generated in response are just essentially it inferring from the data it's trained on what the most likely response should be. So that's not knowledge, that's not intelligence, that's just probabilistic inference. That doesn't mean it doesn't have use cases. It does, and we can see it in video generation, in image generation, in audio, and certain text-based interactions. It's definitely helpful for coding, but you know, there's downsides to that too. It doesn't always follow best practices. It's can create code bases that are difficult to maintain. But at the end of the day, I feel like the long and short of it is the hype far exceeds the reality in AI as it concerns generative AI right now. And it was interesting bringing it back to Palantir. Alex Karp on the call last night was discussing the difference between generative AI and ontological AI, which is what Palantir leans into, and basically saying generative, you can spend all the money you want, you're not going to get the results you want. But with what Palantir offers through Foundry, companies are able to create a durable competitive advantage by automating, by improving their analytics and awareness of their data and otherwise. So there is a big difference between different types of AI, and I don't want that to get lost in the narrative about the AI bubble. The AI bubble is something that's captured the hearts and minds of a lot of investors, but there's more substance in what Palantir is doing than what OpenAI is doing, and that's what I really wanted to get to with that. And I've got a question about gold, so I'm going to pull that up on the big chart, and then we'll drill in. All right, so here's our gold chart. We're going to pull it up on a weekly, and I'm going to just reiterate what I've said. I want to see this thing coming back down a bit. I'm actually going to pull up a different chart here so I can show you the moving average I like to track with gold. So here's gold on the weekly chart. And what we really want to see is gold come back to this 20-week. That would make me quite happy. That would be a strong rebid zone. You can also look at the 50-day on gold as an area of potential support, but I'm really looking at that 20-week, similar to what I'm looking at for Bitcoin. I think that's an area where we've seen gold rebid. It's really honored that throughout this trend. And this last move was a little bit parabolic. You don't want parabolic. Yes, it feels good. I've got a lot of gold stock exposure. through things like Rio 2 and other miners and royalty companies. I've got physical gold and silver and futures contracts that, I have on my swings. It feels really good when gold goes straight up with all those kinds of investments and trades. But the problem is, and I've been trading gold since like 2006, you do not want to see it just go straight up. It very rarely ends well. So I actually welcome this pullback. I think it's very constructive, and I've been hoping to see it for some time that gold would correct. Remember also, asset manager long exposure, the subchart here, it didn't get to extremes during this run compared to some of the other runs we've seen. So it's not like we're in that euphoric moment yet with gold. I still think gold can hit $5,000 an ounce in the first half of next year. And it has everything to do with growing economic and geopolitical uncertainty, irresponsible central bank policy and deficit spending, and really just more credit creation globally as a part of all of this. There's not a lot of scenarios where I see gold pulling back meaningfully unless we get into a recession. And even then, during that first part of the economic slowdown, gold tends to benefit. It's not really until things start to unwind and you see deleveraging across the board that gold gets hit in that type of a period. So basically, when you have that slowdown, gold starts to outperform, and then eventually it pulls back when there's a deleveraging across multiple asset classes. So for now, watching the 20-week on gold, that's a level that I think is continuing to be important for this rally. Now, overnight in gold, you had a pretty nice little sell down. Really started to accelerate this morning. You could see gold trading down. Let's look at the futures market here just to get a current quote. Down about just about 0.7%. And again, I'm not terribly worried about the way gold is trading here. This is healthy. This is what you really want if you want continuation. All right, let's take a look at NASDAQ. That was one of the questions, and I apologize if I haven't gotten your question yet. There's a fair amount of them that I'm going through in the chat rooms here, so I'm doing my best to go through them all. So NASDAQ here, first of all, let's just quickly talk about our pivot. Our pivot is 25,700.25. So while the S&P is below that, the NASDAQ is marginally above it. The gamma flip level is right around that level as well. That gives us extra confidence that that pivot level is important. Gamma flip levels also tend to offer some degree of support and resistance. So overall with the NASDAQ, we saw that same sort of distributed pattern, a lot of seller absorption, some attempts by buyers to absorb into yesterday's trading as well. And then we really sold off into Globex. And markets are about to open. We're going to shift back over to the S&P here. Also, we had news that Michael Burry disclosed puts on NVIDIA and Palantir after making a warning about the stock market bubble. Some folks have confused that with him having 66% of his total portfolio in Palantir puts. Those are notional values, folks. Let's make sure we do our due diligence on these before posting about things that could seem like an extreme. Getting some selling pressure into the open so far on the S&P futures. Saw a little bit of iceberg selling up top. And now we're starting to see some iceberg buying just down there at the lows. So Tesla is down as the Norway Sovereign Wealth Fund is opposing his $1 trillion pay package. That brings Tesla down 3.21% to 454.23. We do see some put sweeps happening in Triple Q targeting the 618 strike with about $250,000 of value paid. Those are for today's expiration. So that's some, you could call it hedging. Might be a bit of a directional bet given how close the expiry is, though. And that is targeting meaningful further downside. We'll continue to watch that option flow as it comes through. Speaking of options flow, let's just zoom out on the visualizer here, get some of these important levels. You can see there was a lot of interest overhead yesterday. Also, build out some sell side delta on the session volume profile. We've got Gamma 2 right up ahead. That's where we would be watching for initial resistance if we get a move higher. If you get pulled into one of these Gamma levels, it often can act as support and resistance, but also has a magnetic impact. That is to say, it can kind of pull you into that level and have you chop around a bit. And I've got a question from Steven over at the Bookmap Discord on the Euro. And yeah, I mean, I think it's definitely interesting. I do look at this pair. You could see it rolling over just a little bit, but overall, I think the dollar is back for the moment. And the big reason the dollar is back is because there's not a strong impetus for the Fed to cut like what was expected. We're seeing some degree of repricing of the Fed. And so I think that's helping. I think the other side of it also is really when you look at how much the dollar had fallen over 2025, it got a little bit ahead of itself. So if you look at those lows over the summer and into late fall, I do feel like that got a bit ahead of itself. You know, the euro has its own troubles. The European Economic Union is not exactly in stellar shape. Germany's economy, which was one of the strongest economies for some time, is having a bit of an industrial collapse. And I think that also weighs on things. We see the US economy still chugging along. You know, you can make the argument that most of it has to do with AI related spending. But on the other side of it, there's not a lot to pin your hat on to say, oh boy, this gets me really excited about owning the euro. To me, the euro has really just provided a good dollar, like a good hedge against dollar weakness. But if I'm going to be buying something for that, I'd much rather be buying gold. But nevertheless, yeah, strong distributive flows in the euro, getting right back to the pre-market lows here. So kind of a decisive area. And we do have some selling pressure continuing in the S&P, making new session lows. I'm going to take a moment to pull back and look at some of the longer term charts as well. So what's happening in the NASDAQ here is just pure violence. We're going to shift over to the NASDAQ for a second. And we're going to go to a 20-minute time frame. There's just a lot of selling pressure in the NASDAQ this morning, continuing from that overnight. And we have a pivot level to watch, a secondary pivot. We've just crushed the first weekly pivot and the gamma flip level. The second pivot to watch is going to be 25,644.75. That's around the lows at 5 a.m. There is some support down there to watch as well, but this is a pretty nasty look off the open overall. And so this is our S&P pivot chart. You can also see just the daily pivot. We're crushing that as well. Right off the open, went right down, had a bearish fair value gap, which was preceded by another bearish fair value gap. We also went right below the BGL. So you have that confluence of signals just showing you sellers are getting more aggressive and they're pushing below some of these really important levels. So that's something to keep an eye on, just the conviction of sellers. And then Steven saying that recent low in the euro taken out as well. That's bullish for the dollar. It's a bit bearish for gold, euros, and other currency pairs that are trading against the dollar. A lot of order flow coming through this morning, too. And Philadelphia semi-index fallen over 2% here to a one-week low, seeing some pressure across technology stocks. I remarked about it a little earlier this morning. Let's bring up the heat map here. You can see the tech sector, I mean, this whole upper left area just absolutely getting sold down. Not a lot of stocks avoiding that. Apple, Broadcom, somewhat avoiding it. Then you've got what are called consumer cyclicals, but we know these as tech companies as well. Tesla down 4.15%. We call these communication companies, but they're pretty much tech as well. Google down 1.72%, Meta down 0.5%, but Meta's had its own struggle. It's trading around 634 after that big swoon post earnings. So really, a bit of a bloodbath in tech. That explains some of the relative weakness we're seeing in the NASDAQ versus the S&P as well. NASDAQ down 1.6%, S&P down 1.2%. Going to head back to the S&P futures here. There's another decent sized sell side iceberg, 200 lots earlier. That marked the top of that little move. We could see there was just a little bit of an extension. Then we made a new low. We made a higher high here. We may be making a higher low, but again, this is right off the bell trading. It's going to be more volatile. If we're looking at this from the perspective of the opening range, you've got about a 17 handle opening range so far. So it's a bit spicy. It suggests we could have some decent volatility today. Let's check back in on the euro. Yeah, you can see that new low being made. And it's not without the effort of buyers. Buyers have been throwing some ammo in. You can see those aggressive buy side bubbles, but really hasn't made much of a difference so far. Now, if we zoom out, you can also see some interest building in those lower bids. And it's interesting for me to watch how price reacts. If you see price go right into one of those lower bids, sellers absorb it and keep going, that's a sign, if you're subscribing to auction theory, that there's plenty of supply. The price can continue to try to move lower. Let's take a look at Bitcoin as well. We know that crypto has been struggling. You can see just right off the US market open, liquidation pressure increasing in crypto. Bitcoin coming down to that 124 bid and just absolutely absorbing it. Sellers went right through it. You can see we're probably about to make another lower high here and then continue that path down. You can see it's a pretty established micro trend. Lower high, lower low, lower high, lower low. That's kind of the pattern we have. So it's that structure that we're likely to continue, especially as sellers are giving us a sense that they still have supply here. That was a decent sized little print here. About what, $13 million worth of Bitcoin liquidated. S&P meanwhile consolidating off those lows. And we did get news this morning that EV sales are slowing meaningfully in October across the board. That could also be bad for Tesla today. We're seeing a big push higher in S&P futures off the lows. Some decent buy-side volume in that move as well. Getting right back up to the high for regular trading hours. Pushing above the BGL, which is the EMA 21 on a 5-minute chart. And that intraday pivot. So we can see that move happening, just flashing to the other chart here. There is a bit of a bullish fair value gap showing some aggression in the S&P futures as this move was starting as well. Don't see anything crossing the wires yet. And the open market imbalances were pretty mixed, so I don't think it has a lot to do with that order flow. Not that it's that influential, but sometimes it's worth noting. Today it was just negative 319 million on S&P, plus 67 million on NASDAQ. Not a lot to see there. Nevertheless, though, this is the largest delta buy-side volume we've seen on a 5-minute candle, and this only a little over 3 minutes in for this entire 5-hour time period. Pfizer shares, meanwhile, reversing losses post-earnings, up 2% here. Seeing some bearish flows into GLD. That's the gold ETF targeting the 342 strike with 180,000 in premium paid. And those are expiring next year. So that does look more like a hedge. This is also why you really want to be careful trading the market open if you're trading index futures, because it's not necessarily going to give you an extremely clear indication of what it wants to do. I'd much rather look for any kind of trend that takes shape based on the flow and the price action and try to capitalize on that. The other day, someone was remarking that, the best thing to do is to just short the 30-second opening range. And someone else wisely remarked that it doesn't really have the statistics behind it to back it. And I remarked on that saying, yeah, it's basically a gamble. And that's the key. There's a big difference between taking calculated risks backed by probabilities and momentum and just simply gambling. If you're gambling, it might be because you want to feel like you have skin in the game. You might want that dopamine rush. But the reality is, the less emotion that you have around your trading and the outcomes, the better you're going to be able to do over time. So we can see S&P futures making new session highs here. Loving this opening range. We're about 6 minutes away from carving out the 20-minute opening range. And so far, it is pretty chunky. It's about 24 handles. So that suggests we could have a decent dynamic trading day here. Let's zoom out a little bit. We're getting right up to that gamma 2 level we talked about earlier that could potentially be resistance. That's right under the gamma flip. We can see some offers starting to build overhead as well. One noteworthy offer, however, is that 68.55, 224 contracts on offer. And if we look across the bid ask, we can see it's pretty balanced overall. 13,000 on offers, 14,000 on bids. So, Satisfaction Tori asked if I could make the SPX options visualizer for gold. And good news, it's coming. I actually am beta testing it on the TraderAid Discord right now, along with some of the other SPX option or other options visualizers, I should say, like the NDX or NASDAQ options visualizer. But point is, that data feed is coming very soon for GLD, for SPY, for Triple Q, IWM, for all the Mag 7 stocks, and some other optionable instruments. It's going to be all part of the main package. So if you lock in the SPX visualizer now, you lock in that rate and you get all those other options feeds when we turn the key and go live. Look for a lot of cool stuff coming from TraderAid as we get into next year. We're going to have a new website, a bunch of new trading tools, really going to be revamping a lot of the stuff we're doing. I'm super duper excited. Kevin Cronin saying, looks like we gapped the 9-minute EMA. That's a huge red flag to me. Said that earlier. I don't get timestamps on the X chat feed, so I'm just relaying that. And if you're enjoying the feed, feel free to throw a like in, subscribe to the channels if you're on YouTube, give me a follow if you're on Twitter, share the stream. There's a repost button on Twitter where you can easily share the stream there as well. Overall, it looks like one of the two scenarios we talked about are playing out. Really, we were looking for a dynamic trading day pre-market, as we talked about, either a rebid or a continuation. It wasn't going to be just consolidation, not after a move like that overnight. Looks like we're getting a rebid. We are just about a minute away from closing out the 20-minute opening range, and I love the range we're seeing. It's about 26 handles now. That suggests we could have a really dynamic trading day ahead of us. We're starting to get some of that flow in as well. Just give me a second. I'll see what I can do to monitor that. So right now, flow is leaning bearish, which, is not too surprising given the kind of open we've had and the overnight session. But right now, it's about 10,000 on the most active put strikes versus 3,000 on the most active call strikes. And total put call ratio 1.12, so leaning a little put heavy there as well. And I'll post that flow. In fact, what I'll do, because it's a kind of dynamic trading day here, folks, I'm going to keep the stream open a little longer. So I will cut off the, Bookmap YouTube and the other stuff, but I'll continue on X for a little bit today due to the volatility and hopefully to provide some educational value for folks that are tuned in about how we can use tools like Bookmap, the SPX options visualizer, and others to really get a sense as to how the market's trading and what path of least resistance we have so we can capitalize on that momentum. And if you are enjoying Bookmap, check out TraderAid.com/bookmap. You can get up to 40% off to scroll down to those special offers. If you find the SPX options visualizer useful to your trading, you can check it out for Bookmap or MotiveWave, and more platforms are coming soon, as well as more tools. But you can check out the SPX options visualizer at TraderAid.com/SPX. And finally, if you want to check out our Discord community, visit TraderAid.com. Learn more about what we're doing. We're building cutting-edge trading tools, providing helpful research and trading ideas, and we built a really awesome community as well on top of all that. Got a lot of great members. We are seeing some bullish continuation in the S&P, making new session highs here. Could also see another bullish fair value gap coming in just below this candle. So these fair value gaps have been pretty helpful just to show which side is a little bit more aggressive. And we're leaning into the Gamma 2, Gamma Flip confluence level of 68.30 here. Put flow still heavy, 26,000 on the top two put strikes versus 5,000 on the top two calls. And put call ratio is pretty darn high. I'm now seeing 1.98. Some bearish sweeps in SPY, noteworthy strike of 666, 220,000 in trade value. That's for next week's expiration, next Tuesday, as it turns out, with a 7.3 to 1 vol to OI ratio. That also looks a bit more like hedging. So one thing to keep in mind about put flow, it's an important thing to consider that people usually buy calls and things like SPX because they want upside. People often buy puts in SPX because they want to hedge against downside. It's not the composition of put flow that's hedging versus directional betting is lopsided. It's mostly hedging. And so when you see some of that put flow coming in, it may also be folks saying, you know what, I want to buy more. I want more long exposure. I want to buy into this dip. But the only way I can do that with the way that, risk is managed is by putting on more hedges. So you could see, folks saying, oh, look at Palantir down 10%, look at Tesla down 5%, look at, Nvidia down 2%, et cetera. I want to buy some of these names, but I can't free up cash unless I add to my hedges. So that's another thing that can happen on days like today is you can see these big put sweeps coming through, and it's because some of the larger trading desks want to add to their longs, which may indeed be part of what's happening this morning. Because those are very heavy put flows. They're obviously not yet weighing on the market. Instead, you're actually seeing a lot of these favorites in tech coming off of their lows. Some even starting to go positive. Broadcom now up about 1/10 of 1%. Palantir off its lows, Nvidia off its lows, Tesla cut its lows at about half. So there's definitely some excitement here. Let's take a look at SPY as well. Here's the SPY options visualizer. You can see that on the right-hand side. And just like in SPX, SPY put flow is heavy, but we're seeing that push higher. We've got triple Q as well. Triple Q has a somewhat similar look, but flows more balanced in triple Q, the NASDAQ 100 ETF. And then, of course, we have NDX. NDX is not the most actively traded, but the flow there is pretty mixed as well, sort of like triple Q. So it's really more in SPX and SPY that you're seeing what I think is hedging flow right now. And we are leaning right into that gamma 2, gamma flip confluence area. We talked about that as a potential area where we might see some resistance and get a bit stuck. We also have an 825 contract bid coming in just below price here. Sellers not even leaning at all into this. There was one attempted absorption earlier, did not dissuade buyers whatsoever. So with these alerts, with these events, it's not just important that you see them print, it's also important to see how we react. How do we react to large levels of offered liquidity or aggressive absorption or some of these key levels? Right now, the way we're reacting suggests buyers are not at all concerned. We're breaking above that 20-minute opening range that we've talked about earlier in this. It's about a 30 handle opening range, which suggests a very dynamic market. And this is a market that looks like it wants to continue pushing higher. So I'm leaning bullish into this with everything we're seeing. It looks like we have hedging, so longs can add to value at risk. Buyers are extremely motivated. And even attempts by sellers to pull this back has not been successful. So it's looking more and more like we're going to kind of reverse that overnight move. Let's zoom this out so we can see what that looks like. Because when you're really close up, it looks like, wow, it's already moved so much. But you zoom it out, it barely looks like it's moved at all. I would not be too surprised if we get right back up to the confluence area between the hot call, key 5 plus, and the point of control. The way this thing is trading, there is really motivated buying happening here. Can't get, you don't want to run in front of a freight train. So I would be very careful trying to fade this so far. We have no signs yet that momentum is running out. You do have more offers starting to build overhead as well. That is a constructive look. They're not incredibly large. There's just folks that have bought lower that want to release some of that liquidity higher. And again, that comes back to the key theme of trading: buying and selling inventory, capturing a positive spread. You know, if you got involved with the post-open mess, you could have gotten chopped up. If you came into this market with a really strong conviction one way or the other, you could have gotten chopped up in that open. But if you waited for things to kind of balance out and you get a sense, whether you're using 10, 15, 20-minute opening range, you get a sense it's breaking above the top of that opening range. It's building acceptance. Buyers remain aggressive up here. We're also building above this confluence between that large bid, Gamma 2, and the Gamma flip. This is all now around the same level, giving it a little bit more importance. So let's see how we trade here, but overall looking constructive for a rebound today. So off the lows, NASDAQ's basically cut its overnight losses in half. S&P similar there. Dow's really not moving much. It's now just down kind of 0.5%. Earlier it was down like 0.6%. It just doesn't care. It just does whatever it needs to do, as the Boomer Index does. Russell 2000 down about 0.75%, also cutting its losses in about half. Meta now turning positive by 0.5%. Same with Broadcom. Amazon up about 1/3% here. Seeing some bullish sweeps and SPY calls. 135,000 paid for the 679 strike expiring today. Put flow remains heavy, but again, I think some of this is hedging. And look at that. We're heading right back up to our weekly pivot here, too. This is pretty incredible. That's the next area of resistance I'd be watching on ES is 6843.25. You can see there's yet another bullish fair value gap. These have been so helpful. Look at these, helping to show the aggression before some of these larger moves higher. And Jonathan C. saying he always waits those first 15 minutes before trading. A wise decision, Jonathan. And Jaws asking, what do I mean when I say 26 handles? That's a good question. I know that the phrasing, the terms that we use in trading are not always universal. So handles are another way of saying points. So it's 26 ES points, 26 handles. Hopefully that is helpful for you. And Ship says, you are such a great teacher. Thank you so much for always having awesome insight. Well, thank you. That's an incredibly kind comment. And then let's shift over to NQ here as we wrap up this part of the session. NQ, a very similar look as S&P, making new highs, very clear structure micro uptrend. That is to say, an intraday uptrend. The aggression on the buy side in the NASDAQ is much stronger than the S&P. There's also a really large bid for a contract that only has order book liquidity of about 9,000 or less. That 1,000 bid just below, and the fact that, buyers are just running away from it, sellers couldn't even get to it, that gives you another sense that the demand there in the NASDAQ is strong. And then look at the ratio between the bid and the offer. 5.5 thousand on bid, 2.9 thousand to 3,000 on offer. That also gives you a sense that this is a bid heavy order book in the NASDAQ. That's bullish. So overall, what we're seeing here suggests that we're going to recover off these overnight, sort of sell down that we've seen. It's uncharacteristic. Typically, the overnight session, you get a little bit more upward momentum if you look at how it trades, statistically speaking, over long swaths of time. But when you do get these downward moves, if you're bullish in the market, the best thing to happen is to see people buy that dip and pull us all the way out of that overnight low and make a new session high during the trading day. So that's what I'd really like to see. If we're going to see that in the NASDAQ, we're pulling that out. We're going to want to see this thing break back above, let's call it 26,050. That move off the open strongly suggests that that's in the cards today. Similar with the S&P 500, you know, this is looking like a double bottom to me. Just quick eyeball. But that would take us back up to about 680, let's call it 68.86 on the S&P. So you could still have some chunky upside here. There's a lot of conviction on the buy side that has me thinking this could continue. The biggest risks are going to be headlines on a data light day like today. And then after hours, of course, AMD, which has had its best month since 2001. So a lot to prove for AMD. So folks, I want to ask you to, if you want to stay tuned, shift over to Twitter. We're going to be moving the broadcast over to Twitter only, and we'll be carrying that for a little while longer into today's trading day. I want to thank everyone for tuning in. If you want to learn more about my work, visit TraderAid.com. If you want to pick up a copy of Bookmap at a 40% discount, visit TraderAid.com/bookmap and scroll down to the special offers. And if you want to check out the SPX options visualizer, visit TraderAid.com/SPX. Thanks for tuning in. I'll catch you next week, Tuesday, 9 a.m. Eastern, and I'll also be around tonight for AMD earnings.